Hello, Warriors. Are you guys ready for today?
Yes, sir,
All
coach.
right,
Yes, sir.
are you ready for tomorrow, today?
Yes,
Yeah.
TGIF tomorrow. Yes, coach.
I tell you, it's great to have a Marine in here. I'll tell Mike, how are you? Ryan, you can't stay away. I was crying earlier. I see, all the things that you worry about uh,
Yeah.
usually don't happen. That's why worrying works. So, Scott, you're very welcome. Are you part of our community yet? Bran, uh, I might be part of the cabinet. Yeah, inside, inside, tied up. James Groom, how are you, Ingmar, Paul, Marcus, AJ? Hi, Laura, David Hess, and let's go to work. All right. So I guess the big thing we should be concentrating on is BOJ, right? What time today, Ryan? Your time and say US time, are we going to be able to
Any time, probably. Well, they don't have a set time, as you know, so it's usually any time sort of from 2:30 in the morning my time. So that's what 5 hours behind.
yeah.
10 o'clock your time, depending on where
Oh
you are.
boy. Oh gosh.
Well, it's
That
usually somewhere around the noon Tokyo time, right? So wherever that
yeah.
lands for wherever you're at. You
Well,
know what I mean?
I've had my cookies and milk by that time. So any 10 o'clock.
Well,
It
for
may
us,
as well be midnight, huh?
Dale, for us, it's around 8 o'clock, 10 o'clock for New York
Oh,
time. So somewhere in that
okay.
neighborhood. Yeah.
All right. So it's almost got to 57. Here's the question. Is this gonna be a failing rally, or is there gonna be enough juice for a new high if BOJ disappoints? You have a view on that, Ryan?
Yeah, I think the balance of risk is that we see dollar yen higher, even if they do hike. So
Okay.
I've got more reasons for it to go up than it to go down. Purely on the Japanese side, the Bank of Japan side, because we've got this bid in dollar yen, and we've still got a bid in dollar yen hours before a Bank of Japan meeting. So the
Right.
market seems happy that it's going to get a hike. So obviously the big risk, if they do decide to go on pause, or if they decide to do a smaller than 25 pip hike, then this is going to blow higher. So yeah,
Hey, Ryan,
Yeah.
can I interject here and
No,
just
you sure.
Dale, sorry.
No,
I
sure.
just wanted to. There was a comment from Vince yesterday, and there's some people running. Vince, he's one of our community members. We were talking about this during the Morning Edge yesterday, and he's over there in the UK. And but we were talking about some people floating around the idea to curb the big rise in Japanese JGB 2-year yields that are just ripping. Um, about the BOJ might be forced to hike rates by 50 basis points. I see it as a very low probability, but that doesn't mean that the market's not thinking there's a potential risk. I mean, look, if you take a look at 2-year yields, they have
Yeah.
taken off. I mean, they really have. So,
well they'll go even higher if they hike 50.
but some people say that it would actually curb kind of like what we saw here in the U.S. But anyway, I don't know. I mean, I'm with you on everything that you're saying, but I do have to. I'm gonna add some stuff when after you guys are done having this conversation because I think it is the BOJ is worth talking about tonight. And I'm like you. I feel that we could probably sell it at higher prices, but there are the buts, right?
Yeah, a 50 would really shock the market and probably create a bit of panic.
Hmm.
And that's not what they want to do. I mean, you can never rule these things out from central banks, as we learned over the last couple of years. But to do that, the market will go, well, hang on, what have you seen now? that you didn't see in December when you decided to stay on hold, because nothing's really changed between December and now, and you didn't hike then. Okay, they could say they're waiting for the Trump stuff to unfold, but fundamentally, there's nothing no reason I can see that would have them going to 50, and that probably cause them more pain than anything else.
Okay. All right. So I just want to, for you metalheads, Metallica fans, gold silver ratio still heading up.
What's that tell you,
92.
Dale?
That it's not time to be long silver yet until this peaks. Okay.
But does it
so
have other meaning to you? Like the
it all,
gold silver?
well, yeah, it correlates with the dollar. So, this making new highs, if you believed it, you'd get long the dollar. But I'm going because it's not convenient for me, and I do think the dollar's topped.
It's not convenient.
I'm going with Ryan's call of correlations breaking down.
Yeah.
And I'm just going to trade it individually. Gold silver ratio isn't going to get me bullish a dollar here.
Well,
It should, but
the other thing, Dale, is we've seen the gold dollar correlation break down aggressively, like over the last several months. So
gold, yeah, yeah, and
yeah.
even silver is normally silver gets crushed with a strong dollar, and now you're getting a weak dollar. But I still think that we're going here in silver. At least back down to the 28 level. I'm looking for one more shot down, maybe 27-ish. And, that could happen in a hurry the way it's set up here. So silver is the preferred short. That's also something that tells. It's like trading euro pound. When it's going up, it's strong. Euro's your preferred long, and cable's your preferred short. If you think which way you think the dollar's going to go, and if you're bullish metals, the gold silver ratio is still saying be long gold over silver. So but we're getting close to where that could turn, I think, in a few weeks. That's a CFD. You could trade the gold silver ratio. In some places you can just trade this. So anyway, I would say if people that are holding physical metals, that up around 95, you don't have to do it with everything, but you may want to exchange some of your gold for silver because of silver being so undervalued to gold. That's what you learn from the gold silver ratio. I guess plenty.
Yeah.
Well, you got to follow this stuff, guys, and learn about things that will give you a good bias. I mean, this gives you a good bias of what you want to be buying and selling. Just like euro pound was a signal for the low in euro, right? We talked about that a long time ago when euro pound pulled back here. What's this? December 30th, and then here's euro. Okay, so euro made one more new low without euro pound. So that was an important thing to know. Euro pound was not confirming the new lows here in euro. I guess we should cover Looney. Maybe Blake, you're going to be right, and they're just going to jack it up to that fib number you want to be a seller at. Any feel on the Looney, Ryan? Comment on commodity currencies?
Yeah, we're in this tight range. It's not going to last for long. This is nearly the longest consolidation period we've had since April, May, June, summer last year, and it's not going to stay there long. It never does. So 145, 143, that little dip lower that we got the other day to 142.65 goes all the way back to 2020. So that's why that's a level as well. So But if we're breaking out of 143 again or out of 145, then that's possibly the break that's going to have some legs.
Okay. I know Joseph Wang is hoping for that. Mexico actually isn't bouncing back like Canada. And they're both getting supposedly hit with the same size of tariffs. Any explanation for that? That looks heavy to me.
Yeah, we've got this 25% coming, but that's just on immigration and drugs and crime and all that sort of stuff. Trump's already said it's nothing to do with trade, so that is yet to come. So that's probably why we're not moving too much in this one, because he could turn around and say, right, Mexico, we want to renegotiate the USMCA in Canada, so it's 100% tariffs on this, that, and the other if you don't renegotiate, and that's what will move the market. So we're still waiting for that part of the trade to happen.
You know, you were all over the top here in US dollar won. I mean, you're looking for sales up here in the 730 range,
Yeah,
right?
I'm short. I got short a
Okay.
while back, and I clipped some off at 726.5 in that move.
Okay. How now, Brown Cow? Do you sell rips in this?
I'm not so keen to add back. I'm still running some buy stops, some reverses through 738s, because again, we don't know the full message from Trump about China. So if he smashes them hard, then we could be going right up through those highs, which also go back into last year and the year before. So it's a big level. I'm going to keep what I've got rather than adding back and see what happens.
Anyone buy their tickets to enter the Stargate when it's developed? I used to watch that television show. Remember, you would just jump into something and end up in a different world.
Yeah, it was
Well,
a film first, wasn't it?
Yeah, I'll tell you what, that people who date, they would love to have a Stargate. Instead of having to run away and jump into their car, it would be more efficient. Anyway, Musk came out against it. I couldn't help it. Probably get blown out, but I took a shot at Nvidia here. I know, it could still break out at over 155, but this was about 78.6 back. So while the S&Ps were making new highs, I was looking at things that weren't, and I thought I missed it after this, and I was short during this whole period. Apple makes me sick because I was short before it, and then got out on this blow off and never got in. So I'm taking a shot. Doesn't make there are a lot of things that could work against it because the semis are acting pretty good. But I want to come to you, Blake, on this S&Ps. Now, when we made new highs for the move intraday, and I'm not saying it's bearish, but it surely wasn't impressive getting above 6,100 for a few minutes.
Yeah, we were talking about that right at the close yesterday, and about as we were trading at that level, and I'm like, today's close is going to be important, and we couldn't close above it, so I think the market might be a little defensive today. Don't forget that today at 11 a.m., I think it's 11 a.m. Eastern, President Trump, he is speaking via satellite in Davos, and this is going to be, he's going to have Q&A from a lot of business leaders.
Yeah.
So my opinion is, since he knows a lot of market participants are going to be watching this, he's going to be a little bit more tougher on when he gets questioned about trade, potential trade wars and everything else.
He might scare those Davos people.
Yeah, I think he's going to try to talk tough because he knows all of his business peers are watching, right? And that's one of the things that we've learned about Trump and over the last, of his first term, and we know about him now. is a lot of it is optics. So, his appearance on this WEF is going to be pretty important today, in my opinion. So,
Yeah.
and I guess the reason why I mentioned that is because it could have an effect on what happens with equities today,
Yeah.
especially with the S&P really struggling at the highs from yesterday.
Okay. And VIX, just want to point out that it's probably nothing, which is what I said down here, but we filled this gap where that red dot is yesterday and trying to turn. So be careful with the VIX. So I mean, just think about where we were here. S&Ps were a lot lower here, new all-time highs, and we're not at new lows in the VIX. I might be reading too much into it, but I would, here's what I say to myself sometimes. Would I be short? No. Okay, so I wouldn't be short the VIX. And looking for, 13 or 12. The VIX could go up while the market continues to advance too, if they're worried about the quality of the rally. So I wanted to show that, and just a quick rundown on some of the Mag 7 stocks. Also, I thought we were going to get one more push up in Bitcoin, to have a 3 when we were here. Um, you know, back under 100, we're back at 92 again. So we'll see about what happens here with Bitcoin. I hear there's 1.7 billion market cap in Fartcoin. Is that true, Blake?
Yeah,
I know.
I'm sure it is. I mean, a lot
Oh,
of these meme coins have gone absolutely
I
bananas.
mean, wouldn't you say that, what's going on here with coins that people, it's just
The
they have
speculative
no,
environment is out of
yeah,
control. It's
yeah,
out of
they have,
control.
no utility, do they? I mean, you can't
No.
use them for anything. Okay. All right. So, uh, if you've been long miners for this, and this has been a pretty nice rally, um, I think we're in a pullback. We'll either most likely put in a high or low. So, I'd be careful with long metal miner positions. But remember, even people, I talked to James Anderson yesterday,
Hmm.
and even and he's in the gold and silver business. And it's typical of most people that are bulls, as far as the physical, they all still hate the miners. This wasn't bad. I mean, it was 15%. So keep an eye on the gold stocks on the next break in silver. If silver gets to that 27 level, I'll be looking at some silver shares that'll be making new lows, but they're grinding them out. There's divergences developing all over the place. Same with this AG. So one more low. So anyway, they're setting up even some of the cheap gold stocks, getting hit, making new lows. Most of them aren't. And Newmont really kind of led the whole thing. So buy pullbacks in miners. I don't think we're going to make new lows.
Sounds good. Hey,
That's
Dale, we
it.
got
Yeah,
about
go
10
ahead.
minutes before Canadian retail sales. Do you mind if I take
Phew,
over here?
phew.
Okay. All
Yeah,
right. Yeah. So I'm gonna cover just a couple of things. Just you were discussing with Ryan, and we were all having a discussion about the BOJ. I'm going to be around. Make sure you guys are in the Forex Analytics community. There's going to be a lot of us around standing by for the BOJ. Um, I agree with Ryan. I actually think it's almost fully priced in about the BOJ hike. The question is, do they leave? Everybody thinks it's going to be a dovish hike. So if it's a dovish hike, that gives us an opportunity to break above these highs. And then I would sell rallies. I would actually look to sell like a lower high in the dollar yen. I actually think that we are making lower highs as you see here. So I think that any rally into like 158 or 157 and change, I'm going to sell into it, especially if they still leave the door open for further rate hikes, because it's not going to be a one and done. It's going to be a one and we're going to be moving pretty slow. The risk is if the BOJ, they sound more like they're going on a normalization type of campaign moving forward. And if that is truly the case, the dollar yen will break the 50 DMA. You can see that's what's supporting us here. I'm going to pull a K-man really quick, and I am going to add Ichimoku clouds. Oh, whoops, not doing that way. Let's I need to add it. Here we go. So if you add the Ichimoku cloud, you can see below there is the top of the cloud that comes in probably right around the 161% extension. It's around 154. We start breaking through that, then there's been a significant shift in the BOJ. That's when that, in my opinion, is when you start going, hey, wait a second. The market is really thinking that the BOJ is they're on the normalization path. Ryan, is there anything more that you wanted to add about the BOJ today?
No, only that we know what the risks are. The risks
Yeah.
are that they either are a bit more hawkish in their message, like you say, maybe going on a bit of a phase of hikes. On the other side, there's still a chance they stay on holds. I think it's a small chance, but you never know with these guys how cautious they are.
They are
Just
so cautious. It's ridiculous.
yeah. So yeah, just either way, the risk, so you know which way to trade it.
It's interesting. I was listening to a podcast, and actually, Dale, it might have been your friend Maggie. When in the evenings
Yeah.
when I'm doing analysis, I listen to like different
Yeah.
podcasts from different people, and I think it was her yesterday. They were talking about, or somebody was talking about, the speculative bubble that we're seeing in cryptos
Coins.
and in the markets just in general. And what really changes that? Well, what changes that is when you get beat into
Rates.
submission, right? When the markets get beat down into submission, that's when things change. And you talk about the BOJ and how you know uh, so timid. That's because their economy has been beaten into submission for 30 years in a deflation type of environment, that they just are so hesitant to raise rates, change monetary policy, despite all the inflationary pressures that are percolating underneath the surface. When you and if you look at the Japan, and you think about Japan in the 80s and about what happened with the Nikkei and how it lost 80% of its value and stayed low for like years. That's how you change the dynamics in from speculation. And then you start talking about like passive funds and flows that continue to drive the US equity markets. We will have to see a sustained move lower in equities for a long time to change that animal, which a lot of people think is the pure driver of US equities, which I believe it is too. It's all passive income, excuse me, passive flows from, you take anybody that has an IRA or 401k, they get a new job, they are automatically going to be putting money towards retirement. And that happens without question. And in order for that to ever change, you're going to have to see, the S&P have the broad markets have a sustained move lower and for an extended period of time. And that's just not where we're at right now. But anyway, it's a very interesting topic of conversation about trading.
Didn't Apple used to be the market and a
Oh,
real
yeah.
big, yeah,
Yeah.
real big barometer. And so what, now it isn't because it's going down. I don't buy it.
Well,
I think
yeah,
go ahead.
I'm with you on that. Apple has really, peeled off quite a bit here, but we're at the 200 DMA. We're in a rising channel. It's
Yeah, it
not
could
like
rally to 240, but do you think that that Apple's going to recover here and make new highs if it gets through that?
I had puts on it a couple of weeks ago and made some pretty good
Yeah.
money, and it's fallen a lot further than I thought it'd get to without dragging down the market. But you shift gears, right?
It's
Money's come back into Nvidia. Thank you. With this
Stargate.
huge investment in AI, so you've had chips stocks rally. You have Amazon hitting new all-time highs, right? So
Diverging.
it is, but still, it's hitting all-time highs.
Watch hit Google, same thing.
Yeah, I mean,
Made a new high.
and
It's
Meta.
down.
I mean, yeah, I mean, Google's rallied off of the lows. You have Facebook or Meta,
All right, you're
that's rallied.
bullish. All right.
Huh?
Okay.
Well, I'm not bullish per se, but I
Buy
see
the
where
market.
I see where the money's it's rotation from in the Mag 7. It's not necessarily, oh, Apple's going down, so the whole market has to go down. But Apple is, I think a big whole, it obviously matters, but
it's a
anyway.
lot of market cap that went away. And, sometimes you get canary in the coal mine and people go, oh, it's just Apple. All right. That's a rationalization to me. Oh, it's
Yeah.
only Apple. Okay.
Right. It's only Apple until Apple comes out of its channel, and then we got a bit of a problem. Hey, if one thing I do want to mention, and Steve is here, so I want to give Steve an opportunity to say a few things. But before I do that, I'm going to go over here to Forex Analytics, and if you look at like the options that are coming out today, we have Canadian retail sales. We were talking about this yesterday. There's about 1.6 billion, which is fairly decent size for Canada. That expiry is at 144, and that's basically we've been pegged to that. And I don't know how far away we're going to get from that level right now, but it is a 50% retracement, and you can see how we've been consolidating around these levels like literally for the last 12 hours. Canadian retail sales are due up in just a few minutes. But Steve, we haven't heard from you yet. Good morning.
Good morning.
Hey, did you have any comments that you want to add to any of the conversations that we've had this morning?
Not really. You covered a lot of ground, and admittedly, during the past couple of days, very few things have changed in the markets technically, right? We seem to be in a wait and see mode. I'm still waiting for final confirmation of the dollar having broken down. How do I get this? By getting confirmation from the euro breaking higher from the channel that it has been testing during the past 3.5 days. We are on top of the trend line resistance, and I think once we see that, it's more or less, hunting season for the dollar, and I think we should be seeing follow through.
Yeah, I've been trying to buy the euro on dips. If you're in the Forex Analytics chat room, I tell everybody where I'm trying to buy dips at every night. And unfortunately, I didn't get filled last night. But that doesn't mean that I can't get filled today. Again, if Trump speaks at in Davos and talks a little bit tough on trade, which I'm assuming he's going to, we might see a little bit of dollar sprinting, as a result of that, which would give the euro maybe a little bit of downside here towards the just below 104 again later today. But notice how the dollar is just quietly perched as it's come out of its channel. It's just quietly perched on its breakout points, and this is a huge support zone because you go all the way back here. This is 2022. This is 2023. There's your support zone, and there's your 50 DMA and the dollar index. If you're a dollar bull, you're probably starting to get a little bit more, concerned, right, Steve?
Oh, absolutely.
A little concerned with.
Yeah,
with
we
the
take
dollar
that out.
position.
We're at 105 in a heartbeat.
Yeah, I agree. I don't.
yeah,
I think we can come down to 106 pretty easily.
Yeah.
And I think maybe even down to the 200 DMA to that 105 that you're talking about. It is possible, and those are levels that I think could be doable. But first things first, it's all about baby steps, right? So,
not me, man.
Well, we
Equity
have.
markets, on the other hand, seem to be unstoppable for the time being.
They are. I mean, we're just nestled up to all-time highs. We have jobless claims coming out, and then Canadian data. So let's pull up the dollar CAD.
Yes.
We have Canadian retail
15
sales.
seconds.
Yeah.
Initial jobless claims are expected to stay more or less at the levels they were previously.
Before the release.
And we have Canadian retail sales as well, which are expected to slow down significantly from last month. Let's see what we get.
Yeah, we'll see. Canadian retail sales.
Canadian retail sales are very
Old.
are flat, which is worse, and core retail sales are very coming out very bad. Initial jobless claims are coming marginally higher, but only marginally.
Did you say they're very old, Ryan?
Yeah, we're chucking out November's data.
Isn't that November data? Yeah. So anyway, so no one's going to be trading on that. The dollar CAD's not moving. Weekly unemployment claims came in a little weaker, as Steve said, but really,
It's very marginal. It's
a little tick up in the continued claims, getting back near that 1.9 million. But I think that's something we have to keep an eye on over the next few weeks. What with all the storms and weather and fires you've got in the US, might start seeing something in the jobless claims numbers that reflects that. Might over the next few weeks.
Might. All right. Well, I know one of my favorite guests that you're bringing on today, Dale, is Bruce. And Bruce is Mr. Wyckoff. So I love Wyckoff accumulation distribution patterns are rare, harder to find, but they're really good when you find them. So
So you think his name is Bruce Wyckoff?
No, his name is Bruce.
All right, see, you don't know his last name.
No,
so it's Bruce.
It's Fraser. Right. I've interviewed Bruce several times.
Yeah, I forgot. Yeah,
but I do like to call. I like to call him Mr. Wyckoff.
Okay. Well, let's bring
you can
Mr.
Call me anything you want.
Let's bring in Mr. Distribution and Accumulation.
Yeah, there you go. Hey, I just want to wish everybody a great day, and remember, Trump is speaking a little bit later this morning. Bruce, welcome to the show, and Steve, Ryan, thank you guys for being here.
Bye, guys. Enjoy the interview, Dale.
Thanks, Ryan. Don't scare me like that anymore. Okay, and then show up, okay? I'll get gray hair over it. All right. Anyway, all right. Thank you, Steve. Thanks, Blake, and welcome back, Bruce. What's on the docket, my friend? Happy New Year to you. I know it's a little later.
Happy New Year.
Yeah, how's it going?
To everybody. Good program so far. I just want to keep listening.
Yeah, well, that's what we do. We bat the ball around, and we guess well.
And often.
At times. Oh yeah. Do you remember, Bruce, it must have been 30 years ago when it used to be FNN, and this brokerage firm was advertising on there. And it was a takeoff on the Unknown Comic. Remember that? The guy would wear a paper bag over his head on the Gong Show. All right. So they had a bank of phones and a guy with a bag over his head, like the Unknown Comic. And the phones would ring and he'd go, "Sounds good, let's do it. Sounds good, let's do it. Sounds good, let's do it." So anyway, how many brokers try and talk you out of them making money on to do a commission?
Oh my gosh. Well, Dale and I go way back. We're a couple of old Dean Witter guys, and
oh my God. Yeah. Dean Witter, and they were in what department store were they in again? Sears?
It's let's see, Shocks, Socks, and Stocks.
They did used to have branches inside of Sears, I believe.
Yes, they did. Yep.
Okay. So, anyway, that's dinosaur.
It is, but we were there at the same time, and now nobody even knows what Dean Witter is, but it was a venerable old firm, and it's so great to hang out with Dale and with you all, and so thank you so much for having me. Okay, so I'm old school, so let's just keep that. So what I thought we could do in the little bit of time that we have is it's a little bit of review, but it's with the idea of looking ahead at 2025. And just sort of, guessing, long-term guessing. So we can have a look and see what might be in store for us in the year ahead. If you want to, just a disclaimer here, that I am guessing, in fact, and that the WyckoffAnalytics.com is a great place to go to get a lot of free content on Wyckoff. There's some great work in there. Go to the Hank Pruden. He was my mentor, my dear friend. I taught with him for 30 years at Golden Gate University, Wyckoff and other things. But anyway, there's his very last presentation that he gave is recorded and on there, and it's a must watch for anybody that wants to learn more about Wyckoff.
His left a nice legacy.
Oh my gosh, yeah. So
we do that. If we teach people, and all you ever hear is about all the failures in the business, right? 90% lose within 90 days, their account's gone. But you don't hear about small retail guys that worked hard and came up with a method and do quite well in the markets, and
so many
by having that skill.
I would say that I taught thousands of people technical analysis over the 30 years that I was at Golden Gate. Hugely popular program. Yeah. So many people have become disciplined, have a good system, have a methodology. They're psychologically in the right place, and they just keep turning the crank and grinding it out. And they've been doing it for decades, and it absolutely is doable. And
you know what they say, Bruce, a good coach can change the game. A great coach can change a life.
No question. Absolutely true.
Are you going to start crying now?
Well,
it is pretty touching.
I am crying.
I am. Let me get a tissue here. All right, go ahead, Bruce.
And that's why we call you Coach. And
anyway,
so anyway, this is a election year seasonality. So this is last year, and we put this up last year and showed it right here among our friends here. And basically, what this is I go back and I take as far back as we have data, and I look at just the election years for the S&P 500, and look at the annual seasonality of all the election years. And in 2023, it worked really well. 24, it worked well. It had a family.
They had a bear raid. We had that Fed bear raid in December. That one big down day.
Yes, and other than that, it's just generally given us the right direction. The peaks and troughs, maybe a little bit off, but still it worked well. And if anything, the market was a little bit stronger than the seasonality. So what I want to do, Dale, is I want to do the post-election year seasonality, so that we can see, give us kind of a roadmap for what could be in store for us in the year ahead, 2025. And I like to think in quarters of a year. I think everything happens there because this is just the way that institutions think. They think in quarters. And so we can see here that, going back, you can see that the end of the year was quite strong post-election.
Right.
And if anything was stronger, and I think it was in anticipation of a pro-economy, pro-investment administration coming in. And so there was a lot of good positive energy for that. And it helped to take out this weakness here in October. Well, now we look ahead at the year, and we can see that the first quarter here is basically flat. Kind of makes sense, and I'll show you why in a minute. But and of course, we don't know whether or not there's going to be a downward bias or a little bit of an upward bias to this, but that generally the market is going to be just more or less range bound, marking time, and that the action really starts in the middle part of the year.
Bruce, are you connected with those people, the Foundation of Cycles people? Do you know who they are?
Yes, I do. I know some of the people on the board.
Okay.
And I don't, I
know
I'm
you're
not
not
an
a cycle
active
guy.
member of it, but I
Yeah.
am very
Well, I bring it
friendly
up
with that.
because they're looking, a lot of their cycles line up for a high at the end of this month,
Okay.
within a
Well,
week, and then
there you go.
down into March,
Okay,
like
there
your
we go.
model,
Mhm.
and then a rally, and then a final low in May. So, but the beginning of their cycle forecast lines up perfectly with the seasonality in February.
There you go. And so we're tape readers. Wyckoffans are tape readers. So I'm going to make also a case in the charts for why I think this could very well play out like this.
Okay.
So, but keep this in mind as a possible roadmap for the year ahead. Now,
take a screenshot, everyone.
Yeah,
okay,
go
too
ahead.
late.
Grab a screenshot.
Go ahead.
And so now here, this is interesting. I've been looking at this data, this decennial data for, gosh, I don't know, 30, 40 years. And this is just summing up all of the years of the decade, ending in its year 1, 2, 3, etc. And
Wow.
Dale, it's scary how well this has worked in this decade. And we had a low that came in the 2022. We had a bear market which really started at the end of 21, but the internals started to break much earlier. But we had a bear into 22. Then the bull started. We spent the first part of it running up through resistance, and you got to take out the COVID year. It was a little bit of a mess, but then up and out. And I've actually taken the market and laid it over this. I don't have that slide with me today, but here's a schematic, a Wyckoff schematic that Blake was referring to. And you can see the schematic and how there's just really a family resemblance here. And I even put the labeling for, this is Wyckoff labeling, and go to Wyckoff Analytics to learn more about that. But you can see up and out, backs up. We call these last points of support, which are important pullbacks in the uptrend, and then the big markup. And we certainly are in a big markup, and we're in a bull market. Now look at the 5th year. This is the part that I just want to.
It goes parabolic.
And so you can see here that the 5th year is long and strong and totally fits with what happens after you finish accumulation, is that you get a really good markup. This markup goes and it goes and it goes. Now, does it have to happen exactly like this? No. As a matter of fact, it wouldn't surprise me if we didn't have something akin to what we saw in the seasonality. But keep this in mind, because we do have a market that just keeps making new highs and showing good strength. And so I'll show some point and figure here in a sec. So anyway, capture that. This is data is 1897 to 2020.
A lot of history.
So a lot of history. Okay. So now getting into some charts. Now, nobody panic over all this. These are our Wyckoff labeling, and this is the way that I keep notes in the market. But I'm using this chart really to show the uptrend and the effects of the quarter end on the market. And these institutions, I think they're kind of crazy actually. But here's the quarter and year ends, and you can see how they just drive the market up right into the ends of quarters. And you can see here, look what happened in 2021. They push the market up, make a high right at the end of the year. That is the final high before the bear starts. And so these institutions are window dressing their portfolios, and the institutions are the only ones that have the buying power to do this. And we know that the S&P is dominated by the Mag 7 type stocks, the growth stocks. Well, look what happened here. We have really a climactic surge of the S&P 500 that occurs in the final quarter of the year into December.
Right.
And it actually peaks out a little bit before. But I have a rule of thumb, and that is that quarter end tops can come anywhere from 2 to 3 weeks before the end of the quarter, which is the green line,
or after,
or 2 to 3 weeks after. So it's a window, and often you get a test where you get the first high before and the test of the high after. And it's exactly what we seem to be having here. And do note this pink dotted line. And this is a reverse. We call this in Wyckoff reverse use of trend lines. We draw them on adjacent peaks right here and here. And look what it's done. It threw over the top of that, overbought, and then it fell back below it. And now it's rallying up testing it. So whenever you get a big break in the market, like you did say here, buying climax automatic reaction, whenever you get that kind of an action, the automatically as Wyckofians, we want to think range bound. Even if it's an uptrend, it could go into a big trading range and have to spend time rebuilding cause. And so that is what I'm thinking here.
58 to 6,100 range. It's going to play around in for a while,
I think that's a very good likelihood. Now, here's a couple of old school charts, but this is the same chart we just looked at. So this more of the labeling work done. I haven't yet done the labeling on this, but I will. But these are kind of my internal notes. But down here, note this is the New York Stock Exchange stocks above their 50-day moving average. It's a breadth indicator. Right. One stock, one vote. It's not dominated by market cap or anything. And when you get, and basically the way I use it is overbought, let's say oversold, and then it starts to turn up. It's got northward directionality. You want to trade that in the market. Market's going up in concert with that. Go with it. If it's overbought and turning down, you look for weakness in the market and you trade with that. Here, look what happened as we culminated the fourth quarter. So it just kept making lower highs and lower highs. And look at this high right here in mid-November, late November. Look at how low it is.
What a divergence.
Big divergence. A big one, Dale.
Yeah.
And huge. This is a throw over, which means that the stocks that are driving the market through this trend channel are the Mag 7 style mega caps. Yeah. And everything else is waning. Yeah. And so this says to me that, again, further argument for best cases we're range bound. And this is the trend channel. We're way overbought here.
Yeah.
Top of the channel.
Yeah.
Yeah.
Could we go to, you have a red, what's the red line? A moving average? Yeah.
Yeah, that's a 50-day. That's the 200-day. Sorry.
A 200, that's what, 5,600 round numbers?
Yes, exactly.
And then your trend line comes in around 53.
Yeah. So
No,
go ahead.
Because I see on your POF that you have those ranges there, 53 and a half. Yeah, ranges on top and ranges on the bottom.
Now, I've shown this chart before. Now, this is the same chart we have over here. I'm just blowing it up a little bit, but this chart is the accumulation structure. And this is an old technique. A point figure is really like the oldest charting method there is. They were, trading commodities in the 14 and 1500s with point figure charts. And there's a technique you can use, which is very Wyckofian, which is horizontal point figure counting. And from that, you can estimate objectives. Now, I posted this chart up, and I've shown it here before in January of 23.
Yeah.
And I put this up. I wrote a blog at Stock Charts on it, and then also put it in my show. And people thought I was absolutely certifiable. But
Oh,
at
yeah,
the
with your
beginning of every bull
targets.
market,
Yeah.
we do these counts, and they're scary good. And so this count, which we took it at we call this the count line, 3775 on the S&P, and we extended this whole base here. It counts up as high as 6275, 6550. And so from this count line of 3775, and at the time everybody was bearish and cautious, and we're saying, hey, this is we're completing a base for a big bull run. And so here, this is the same data. I just use a slightly different scaling. And you can see, and then I brought it up to date. This is through the 21st. And so now this box is at, we've actually hit 6,100 on this box. And we have a count 6,350, 6,700. But we may have to build a cause here to run this up to that level. And I do absolutely believe it's possible, especially with the 5th-year seasonality in the decennial, that we could eventually get there.
Yeah, I know some people talking in the 7,000 handles. And I think you had numbers like that last time we talked.
Well, we could actually make this count bigger.
Yeah.
I tend to be conservative, and then I extend them once we hit objectives. Right. And I do think that 7,000 is possible. Yeah. But it's when it's down here at 3,800 that you want to have you want to be looking at a potential for 7,000, not when it gets to 6,100, right? I'm seeing a lot of that now, but people are I think speculators are very bullish right now, and that this needs to be tamped down. So here's the NASDAQ. Sorry, here's the NASDAQ. Now notice the NASDAQ in its bull run, which has been exceptional. Here's the big accumulation structure, 22, 23. But look what it's doing, Dale. It's just hugging along this lower demand trend line. And it's barely keeping its head above.
Yeah, and look at your divergences what on the indicators that you have underneath.
So I put 2 here. This is just the NASDAQ 100 stocks, and this is the NASDAQ comp, which is all the NASDAQ stocks. They both have a very similar family resemblance.
They do.
So very reason for caution. That's all. And also this green box here is what I think the range bound market could very well be. So if we start to break back below this high of July, this could be the trading range bounded here in this area. Okay, I probably have a couple more minutes.
No, it's all right. Yeah, go ahead.
Okay, so this is the point and figure on the NASDAQ for the bull market, but we can see that it looks, even though people are very bullish on the NASDAQ stocks and the megas, that we can see that it's very much hugging the bottom of this trend channel. It's not overbought like the S&P is. But the other part is, if we go down here to the point figure, we can see that this count
we achieved part of it. Didn't we get to 22? No,
we're there. We're there.
Oh, we did get to 22. Yeah.
Yeah. So now could we get to 2320? Absolutely.
Sure.
But we could blow up there to that. But look at how we're starting to struggle. You know, it's starting to labor up here. And so I would just be very cognizant of this. If we get to 23,200 NASDAQ, we very well could hit that 6,350 level in the S&P. And then they would both be fulfilling count objectives. And that would be something to really pay very close attention to. So
another great presentation by Bruce Fraser. And
Okay.
yeah, really, and really nice stuff. Oh, there's the mags.
Yeah, so here's just the mags, but there's all this excitement about the mags, but
yeah, they're not performing.
Look at the ETF.
Well, look at Apple. Bruce, let me ask you something.
Sure.
Is Apple the tree that fell in the forest that no one can hear?
Yeah. Yes.
And it's a redwood. It's a big tree.
And you know what? Everybody owns Apple, and I can't tell you how many phone calls I've gotten in recent days regarding Apple's recent slide off of.
You've been around for a while. Is it a harbinger or just an aberration?
I think it's well, all right, let's go back to old school.
Okay.
So first of all, this is often referred to, look at these peaks.
Yeah.
And so you can see these peaks. It jumps up through these highs, and then it fails. And in Wyckoff, this would be characterized as a very special kind of a distribution pattern called an upthrust after distribution. So distribution forms maybe as early as July. Right. So all of this has been distributional, and then it throws over the top of this one last time and then fails. And so it may very well find support around here and rally up to these levels
rally
again.
To 240.
Exactly. Yeah. But this happens a lot, is the upthrust after distribution. And it's very disconcerting that it's gone to new highs and then came back, and without really very little effort has taken this old resistance, new support, and it didn't provide support.
20%.
Yeah.
All right. So you didn't answer my question. Is this, look at this chart, cover up the title. Could this be what ends up happening in the market?
I would be very concerned about that, because remember the old saying, that the old saying is beware when the generals march alone. And that's an old Wall Street term.
It is.
And in the old days, it was the generals were the blue chips. So they were General Motors, General Mills, General Electric, General Re, General. And so all of these stocks were the big blue chip names. And when they were walking uphill by themselves, watch out, because the generals were marching and the troops were falling back.
That's exactly it. When the troops retreat, the generals get slaughtered.
Exactly. And so we could see from the breadth charts that we just looked at, which was the stocks above their 50-day, that we could see that here, we can just see it here with the S&P. This is evidence of the generals marching alone.
Yeah.
Because we can see that these are the troops.
Yeah.
Troops are falling back. And look at what the market does. The market marches alone, but we know that the market is really the generals. The generals of today are, the Mag 7 and other big growth names, and
one general's gone down already. So that proves the point.
Exactly. And so
Apple's a general. That is,
it is the generalist general. It's the 5-star general.
Well, maybe NVIDIA is now.
Maybe NVIDIA is. I would agree with that. Yeah.
Okay. Well, anyway, it's great to be in the service with you, and our army of warrior guessers to help prep people to attack something that they try and complicate too much, including myself. Keep it simple. That's what I love about Wyckoff.
Just watch the tape.
Yeah.
The market will tell us what it wants to do. I'll leave you just with this. This is a little chart I did on interest rates. And this was the base that was made. This yet red arrow is when the Fed cut rates for the first time, 50 basis points.
Yeah.
And then this is what the 10-year and the 30-year did. But they've now fulfilled these upward counts. And I think that higher rates may have ended for the moment anyway. I think we're going to build cause.
You don't have
That's
higher
it. I'll leave you.
counts? You don't have any higher counts than
No, that's kind
that
of
was
it.
Oh, okay.
Yeah.
That's a big deal. That's a big deal. That point and figure counts have been fulfilled. That's one of the most important things you said, and you saved it for last.
And point and figure works really well on interest rates. So I'd love to look at that. So anyway,
best place for people to go and see you at wyckoffanalytics.com.
Perfect.
And you have courses going and learn Wyckoff. And you know what? Guys that have been doing Wyckoff and stuff for 30, 40 years, take advantage. Like Bruce said, I'm not being morbid, but people that have been around in the business for 40 years, they're not young. I'm not young. So while you have people like this that have been through so many campaigns and wars in the markets to learn from, do it while they're here. All right.
Yeah.
Really, I think it's important. You brought it up, one of your mentors, so you got to learn from him while he was here. So, if you see guys out there that are, boomers that have been in this since the 60s and 70s, you want to learn from them.
And we try really hard to transfer that knowledge, and we did it through teaching it for 30 years at GGU.
Yeah. And it's like, it's like paying it forward, isn't it?
Absolutely. And nothing makes me happier than to see our wonderful community just excelling and getting better and better. And you never stop learning either.
Okay. And here's our fight song for the year. Let's thrive in 25 and have a great decade this year.
That's why you're the coach.
All right, ready?
Those are words to live by.
I want you to declare it. Say it out loud. Everyone.
Everyone.
We're going to thrive in 25 and have a great decade this year.
Oh my God. A great decade and then take the rest of it off.
Yeah.
Go to the beach. Yeah.
For a while, take a break. Anyway.
That's it.
All right, Bruce. Thanks so much, man.
Thank you all. Thank you, Dale. Thank you all.
Educating our people here. I appreciate it. Bye-bye.
Take care, everyone.
All right, Bruce Fraser. Follow him at RD Wyckoff on X and go to his website and learn what Bruce has to offer. It's classic, masterful stuff. So you're welcome, everyone. General Dale, yeah. See you, Marcus, Sinatra, all you guys. Tomorrow we'll wrap up the week. Adios.